What's up, guys? Long time no see. I hope you guys have been having an amazing summer. I hope you guys have been having an amazing time trading while I've been gone. Obviously, I've taken a few weeks off from making YouTube videos, but I've still been sharing all of my trades and everything in Discord. So in today's video, I'm going to basically give an overview of what I think is going to end up happening soon in the market. I'm going to give you guys the reasoning why we've been moving upward recently. And then from there, we're just going to, do the usual stuff with the video. We're going to talk about the SPY, the NASDAQ, the IWM, all that good stuff, talk about crypto. And it's going to be a pretty fun video overall. All right. So I'm back and let's get started with the video. So number one, before I even begin, I'm live streaming my trades every morning from 9:30 a.m. to 11 a.m. Monday through Friday. I'm doing it for free on Twitch and on YouTube. So if you subscribe to the channel, you'll be able to see the live stream and get a notification for it. But if you don't want to watch the live stream, I still share my trades in the Discord server. So you could go ahead and join the Discord server in the link in the bio description and just follow the steps and send me a message. Everything is completely for free. I'm not charging $1. I'm not charging anyone anything. Everything is literally for free. And in today's stream, we had really good plays. Let me go ahead and show you guys that. Amazing stream. We hit a SPY play for 40%, then another SPY play for 30%. And right after the stream ended, I alerted another play hit 10%. But my point is that it's all for free. I'm giving you guys my play-by-play explanation of why I'm entering and exiting different plays. And it's just an amazing opportunity. I mean, like, I can't lie. Like, there's no lying involved here. Like, I'm actually teaching you guys, like, the best principles, in my opinion, over the years that I've been trading. The best reasons to go in and out of positions. So I hope you guys find value out of that. And I look forward to seeing you guys on those streams. Nobody in the space is doing what I'm doing right now. I am the first and only person to go live everywhere and to share my trades completely live for free. All education, trades, all my thought process behind everything completely free for everybody. And yeah, man, it's an amazing, blessed opportunity. So yeah, there's that. Now let's go ahead and take a look at the rest of the video. Yeah, man, the transitions don't feel natural. They're gonna feel natural again in another few videos once I get used to it. But essentially now, so this is all right. Let's start the video. So this is a chart of the SP500, right? And the white line is basically the current price of the S&P. The blue, yellow, and red lines are the past situations of what happened during past recessions. So we can see 2008, 1937, and 2001. Obviously, it's not definitive, perfect data, right? But essentially what this is showing is that when we did, so basically the entire drawdown from the beginning of the year is very similar across the board, across all four of these different historical time periods. What is also very similar is this pop-up afterward, where we're currently at 413 today. In the blue line in 1934, we've jumped even higher, right? That might not be the case this time, but the premise is that there is a pop after a big drawdown. But then after that pop, we have an even bigger drawdown. So in my opinion, this would be the equivalent of a soft landing, because the Fed essentially has been perpetually trying to push a soft landing narrative. And if we never had this pop, for example, if we never had like a jump from 366 to 420 on the SPY, currently the SPY's price would be at like 3,000 right now. So this would be a perfect opportunity for a bit of a bounce and a softer landing on the fall back down. So it still gave some opportunity for bulls to make money and for bears, longer term bears, to reposition themselves at a higher price and capture a big move either way. So I think that is most likely what is going to end up happening into the end of this year. So now you might ask, why has the SPY been flying? Good question. Essentially, what's been going on is that people have been pricing in that the Fed is going to either stop increasing interest rates at a high level that they have been, or they're going to pause completely. All right. So people are basically pricing in that the Fed is going to be more dovish. And when they're more dovish, that's bullish for the stock market. Lower interest rates means companies have more money, et cetera, et cetera. It's going to help the tech industry. It helps the stock market overall. And essentially that is what the market is pricing in. There's not much that the Fed can do now to combat everything that's happening in the market. So people are pricing in that they will eventually have to just lower the rates and then begin buyback programs again. So that is why we had this monster rally from the bottoms from 366, essentially all the way up to this level here. It's people just basically pricing in that the Fed has no other options and that they, will become bullish moving forward. Not necessarily the best tactic, right? But currently we're playing bullish momentum to the upside. You would be a fool to try to short any of these crazy opportunities of momentum to the upside. So for example, back here a few days ago, we had a close outside of the upper level of the Bollinger Band, right? If you had tried to go short, right? Cool. You could have made a few points, could have fallen to 407, but you would have made so much more money and it would have been much more comfortable if you had bought the dip and followed the momentum upwards. So currently we are in an upward trend line very, very clearly. Today I was saying that the level of support that needed to hold was B412.20. Essentially that held perfectly and we bounced up. So now tomorrow, the level that needs to hold is going to be around 415. Most likely we're not going to open above that level, but what I want to see is a close below this trend line, and then we can scale into longer term puts, because this is going to be a break of this uptrend. So it would be a safer opportunity to get into shorts. We're not playing anything to the short side until levels are broken to the downside. Until then, we just have to play the momentum upwards. We have to buy support, buy the dips, and again, basically just use the market as a range-bound trading environment. There has been little to no follow through to the downside during the early hours of trading, and that's because the setups have been very, very bullish. But if tomorrow we end up red at like 4, because we're most likely going to end up opening below this trend line, right? So if we end up opening maybe like 412, half a percentage down, for example, we have to see if levels of support hold. So we would have to see if 411 holds, we would have to see if 410 holds. And then once, if those levels end up breaking intraday, then that's going to be a very definitive sign that we should be scalping to the short side. Otherwise, we've just consistently been scalping to the long side and it's been working out really, really well. Everyone is doing really, really well. I'm happy to see people are making money. But yeah, there's no point to short until there is a clear-cut reason to short. And yeah, I mean, we can see that the SPY is currently at resistance. This is very, very important resistance right here. And you can see that we're basically at that level here. And if we can break and close above 418 on the SPY, then things are going to be very, very, very interesting. But currently, it looks like we're going to end up breaking this uptrend. And tomorrow might end up being a red day. But it all depends on this uptrend for now and depends on support. 411 level is also very, very important. But aside from that, that is truly it. We can take a look at the indicators. We can see that the MACD indicator is the MACD line is moving upwards, and the fast moving MACD line is oversold now. So that still means that there's more room to the upside. And we can see that the RSI is, so essentially what's happening with the RSI is that it's pinching. It's stagnant here, which means that there's a lot more room to the upside as well. So the indicators are both showing a lot of crazy, crazy strength. And it makes sense because we had a very, very crazy move to the upside recently. This is basically how much percentage up? I don't think I clicked the right button. 1 second, sorry. This was a 12% move in a little over 2 weeks. So that is pretty crazy. But yeah, essentially that's that for the SPY. Let's take a look at the NASDAQ. All right, so this is where things get a little bit more interesting. So we can see that the NASDAQ very, very far away from its uptrend level. It's very comfortably in this uptrend. Tech stocks got a lot of love because obviously the Fed being dovish is good for tech stocks and growth. And that's why the tech sector outperformed the SPY very clearly, right? So yeah, essentially what I want to look at right now is basically how the IWM was a big indicator of why the SPY jumped up so much. So the IWM actually was very, very strong recently as well. And seeing how the IWM fell out of its uptrend, reclaimed it, and is now continuing to move higher, this is extremely overextended to the upside. And so basically what I'm saying is that the IWM was one of the reasons why the SPY ended up doing well, right? So now that the IWM is very overextended to the upside, and we can see that it's barely holding above its uptrend, we need to see if we don't start cracking down below a little bit. So what will end up happening is the IWM will break lower a bit, and then that would be the equivalent of the NASDAQ maybe falling down to retest the trend line because we're very, very far away from it. And then that would translate into the SPY also breaking this trend line, us closing below out of this trend line, which is most likely what's going to end up happening tomorrow. And with our longer term puts, these should be decent if everything is basically going to end up playing out the way that I think it is. But yeah, you don't go short until we break support. This is a support trend line. Until we close below this level, we're continuing to buy dips at support. Intraday, it's a completely different story. Intraday, we're day trading. We're looking at scalps for a few minutes and we're making money. That's it. But on a daily candle, it's been much, much harder to try to guess which way the market is going to go, up, down, left, right. So that's why it's so much simpler and easy to just day trade. So yeah, essentially that's really that for my analysis on the stock market. One other thing. So we can see that, you know, I'm like a very large supporter of the Bollinger Bands, right? So we started really overextending the upside and showing extreme strength to the upside on the Bollinger Bands. Now, technically, we're very overextended to the upside. So what should end up happening is we should fall lower, right? But I didn't want to go short here because similarly to what happened, so first of all, back in April of 2021, the SPY was in a similar situation where we were very overextended to the upside. The ES currently, at the chart that I was showing, opened and closed outside of the upper level of the Bollinger Band. So it looked even more overextended than the SPY. But right now, right in April of 2021, many people ended up going short because we were very overextended to the upside. But what ended up happening is we continued ripping to the upside. Massive buying pressure and buying volume came from hedge funds and banks, pushed the market up completely. And everyone that wanted to go short ended up losing their money, right? So now it was a very, very similar situation. You don't fight institutional buying strength. You don't try to short that. There's no reason to. You follow where the money is flowing. You enter and exit according to momentum. And for the past few weeks, momentum has been bullish. If you've been trying to short, you have to be an amazing trader to time everything properly. But it's so much easier and simpler to just follow the momentum, have an open mind. Don't automatically assume that you know everything in the market. Every day is an opportunity to be humbled. So if there's something that you're not sure of, look back in history to see if there's something that you could look at. But yeah, so that was one of the reasons why I was continuing to remain bullish and buy dips at support, because we were very overextended to the upside. And usually that is a very bullish situation. And yeah, I mean, that's that. I hope you guys enjoyed today's video. I'm back. I'm gonna make videos again every day. I stream every day. And make sure to follow me, subscribe, like, do all that good stuff. And I will see you guys tomorrow. Hopefully, get into the hang of things again. And yeah, the video will be more natural. So yeah, hope you guys enjoyed. And I will see you guys tomorrow. Thank you.